Alrighty traders, let's kick this one off. Welcome to another video. This one's going to be on trade management, and in my opinion, trade management is probably the most important thing that you're going to need to master in your trading journey. Because by losing less, we're going to make more. By having an escape plan, you're going to have more confidence. By knowing what to do, when to do it, when you're in the trade, by having a plan, is going to really help you execute when the stress is on and when you're in a trade. Okay, when you're in a trade, it's hard. It can be hard to think, hard to know what to do when the price is moving and you're focused on what's happening, the dollar figures, price going up and down. And there's all these many things, the elements to it. So you're really going to need to have a plan that you are comfortable with to be able to execute all the time, at the same time. Okay, so let's get to it. So when I say like managing your trade, mainly is by reducing open risk, and we can do this by a few ways. Okay, there's no perfect way. I'm going to say that from the start. There's no perfect one size fits all. You know, there's always going to be pros and cons to each side. Okay, but the three main ways is by scaling out. Okay, scaling out as in taking some of the profits and leaving runners on, or it could be like just moving stop loss. Okay, never increasing risk, but by reducing risk. So like moving your stop loss closer to your entry, and then that can be done in many ways. Okay, it can be like by using trailing stops manually, or you can get some charting softwares to automatically move the stops for you. So I'm going to cover the various options. Okay. So what it's going to be is there's two approaches really. There's going to be a hands-on approach and there's going to be a hands-on approach. So either way, you need to have a plan. So I'm just going to dive over to the charts. Okay. So let's talk about scaling out first. Okay, because that's probably the one that I do most in my trading. So I've got charts up here. Okay, I've got this is a pound USD. Now I like to trade the London session. Okay, so what I do is like I'll look for like a consolidation area, then I'll identify my trade, and let's just jump over to the 30-minute. Okay, so if I was looking at this patch here, okay, you see that I've got in the background is painted when the UK volatility comes in. Okay, the UK session. So if I was looking at taking a trade, and I was going to say, if this was sort of my little range, and then I had a little breakout, and that could be, say I'm just going to enter. I was going to enter for a sell here and keep my stop loss up here somewhere. Okay, so that'll be entry, that'll be stop loss. Now I could have a take profit at, you know, wherever I want to be, wherever I choose. It depended on where, maybe there's some support over here that's going to guide my decision where my TP should be. But it's pretty important to be taking some profits, so making some trades for taking some profits, so that each trade you can't go broke by taking profits. Okay, but we need to know when. We can't take profits as soon as we're like a couple pips in profit. So one of the ways I will look at taking the trade is I'll measure and I'll say that if this was my risk, I'm just going to bring up. Okay, so say I have something like this. This would be my risk, and this is not really about trade executions. This is just about identifying where. Like this is just a concept. Okay, so say then I wanted to. This would be my reward. Okay, and this would be set at 1-to-1 right now. So I'll just change this color. Line can be green. Okay, red for risk, green for reward. Now, when I'm at 1-to-1, it cannot be a losing trade. You cannot let this become a losing trade. So you have options here. Say you wanted to go for a 2-to-1. Okay, let's just clone this. And we'll just make another one. I'll say that would be 2-to-1. Okay, So we've got, let me just draw this in, and we'll just clean all this up. Okay, we'll have an entry, we'll have your stop loss, you've got TP1, and you've got TP2, take profit 2, maybe like your super target. Could be, we'll just say that, okay, take profit 2. Okay, done. Now, when I'm getting to 1-to-1, okay, I'm going to close some of my trade. I'm going to take a percentage, okay, whether it can be 50% or 80%, it's up to you. Either way, if I'm going for a bigger target, I'm going to take some of my profits at 1-to-1, okay, if this is part of my plan. To do that, for smart charts, if you're using smart charts, let me just jump over here for a second. I'll bring up a trade that I have running. Let's just look at, I know it's on my daily. Okay, so Aussie Swiss. Okay. If I'm in this trade, which I could, if I'm using smart charts, what I can do is I can click on this little bin, and it's going to bring up my exit terminal. Okay, so if I push confirm, I'm going to close 100% of my trade. If I don't want to do that, I can actually scale. I can say, look, I want to close 50% of my trade, and then I'm going to leave 50% running, or 80%, or 20%. You know, it's up to you what's it going to be in your plan. Either way, if I'm taking, so say I go back to, let me close this. So that's how you scale out using smart charts. Okay, if I go back to this trade that I was looking at, well, if it was a break, like this London breakout, okay, let's just line this back up. Okay, now I could choose to take 50% of my profits here, and then leave the rest to run, and then move my stop loss to my entry, so that what I've done is at 1-to-1, I've taken 50% of my profits. So let me just draw that. 50% of my profits left, and then I've left the last half of my trade to continue to my second take profit. So what that's going to do is I'm not going to get a 2-to-1 trade. I'm not going to get a 2-to-1 trade. What I'm actually going to get, I'm going to get a 1.5-to-1, because I'm watering down my profits. That's the flip side of scaling out. But say price comes down to my 1-to-1, and then it reverses somewhere, and then it comes back to my stop loss. I don't want to have a losing trade once I've been that much in profit. So I do want to take something from being in profit that much. So that would be one option. The other one, say I don't want to water down my trades. Okay, so I want to keep more of my profits. Let's just say wherever this was, it's 1-to-1. Okay, once I get to 1-to-1, maybe then I'm just going to move my stop loss down to break even. Okay, and then that way, so I'll go click on my stop loss, I'll drag it down, and I'll bring it to my entry point. That way now I'm effectively, if this trade reverses, it's not going to be a losing trade. It's not going to be a losing trade then. Or another option would be that I can trail my stop, because I'm intending that trades that these candles are going to be trending. Okay, what I might opt to do is every time a candle closes, I'm going to move my stop loss above the most recent candle until I either hit my take profit or price starts to retrace. And that way then, if my entry was back up here, I'm banking some profits still, okay, because I'm slowly, once I've moved my stop loss, I can move my stop loss and if my entry was here, I can move my stop loss below my entry, and that way I've locked in profit. So worst case scenario is I've locked in some. This is more hands-on. This is a more hands-on approach. Okay, so what I'm gonna show is that you can actually get smart charts to set this for you as well. Okay, so what you can do, let me just dive over. Let me just go to this one. So say you were going to take a 180 phase changer. Say you were in this trade. Okay, so Euro JPY. This one happened on Friday 29th, which is yesterday. Oh, sorry. Yeah, Friday. This is Sunday today. I'm doing this. Okay, say you took this. This was your trade. Okay. You're in this trade, you can, because this is a 4-hour chart, like on the 30-minute chart, I can be more hands-on, because if I'm trading a session, I will be at the charts for like a 2-3 hour period that I could actually manually move my stop loss or choose when to take my profits at a certain point. On a 4-hour chart, it's not as easy to do, because if you're going to be in this, you're not going to see the charts 4, 8, 12, 16, 24 hours. You're not going to sit there for that long. So say you did want to take this, and this, instead of your entry being here, you want to go for a bigger target. Where would that make sense? Going from daily support up to daily resistance. Okay, you can see how I drew that daily support, which we broke above when we took the trade. This is your next daily resistance. Okay, you can't, unless you're setting the timer to look at the charts every 4 hours, then perhaps you could do that, waiting for the candles to close. But if you can't, like, you're going to be asleep at some stage. So you can actually set, let me just drop this to no strategy. Okay, you can set, when you put your buy entry, let's say you were taking this trade, that was going to be your entry, your stop loss is going to be under this candle, and you had your take profit. Let's just say here, you can set your stop loss, and you can say, I want the smart charts to bar low. Okay, so if it was back here, you'd have to go back 1 bar, but for the sake of this, it would be 1 bar, give it a little bit of room, say 5 pips, and then every time the new candle closes, smart charts will move your stop loss underneath the next one, and when this candle closes, it'll move it underneath here, and so on and so on. Okay, so that could be one way, using the bar low. If you're selling, it would obviously be the bar high. Okay, so that's another option. What I don't really advise using a trailing stop, but some can say that every time, this is how a trailing stop works. Say you want to have price 30 pips. Let me just move this over here. Okay, say you had your entry here, and you're going for a target which was 80 pips. Now, when the price, every time you move 30 pips in profit, this is going to shift up. So once it goes 30 pips, the stop loss will automatically move to your break even, to your entry. If you go up another 30 pips, then it'll shift up another again. So now you're locking in profits. So that's another way of doing it. You don't want to have this too tight. You don't want to have it like 5 pips, because if price moves up 5 pips, your stop loss will move up, and then if it comes down 6, then it'll stop you out. That's strangling price. That's keeping it too tight. Okay, so let's just go back to that. Where are we? We've got scaling out, trailing stops. Yep. Okay. Now the pros and cons to each. Okay, so by trailing stop by a set amount, each pair is going to move different amounts, different volatility per pair. So some might move if it's trending, it might move in nice 20 pip movements. So then you could get away with 25 pips. Every time it moves up 25 pips, you sort of can survive this pullback, this like little phase 2 movement or exhaustion phase. Another way of doing it is you might want to use swing low. Okay, swing low is going to trail the price behind each fractal. Okay, so say like, see there's a fractal low, and if you want to trail it 2 swings below, there's the next fractal low. So this is designed to catch those swings. So this could be utilized on a 30 minute. In 30 minutes, for example, let me go to this breakout one, because this could be nice. This is more for like if you're going for bigger targets. Okay, so say you did enter up here and you don't want to trail it. On a 30 minute is a weaker confirmation. Okay, so you are going to have eventually candles that do break the highs in a downtrend. Okay, so say you were getting in, just for example, like, you know, optimal best case, you saw that you were at like huge amount of resistance and you thought you'd get a nice counter or trade down to an opposing level of support. Say you took that, okay, and you were selling, and this is where you got in. Your stop loss was above the high. Your take profit was this major target, and you wanted to catch the bulk of the move, but you didn't want to sit at the charts and move your stop loss manually. But you didn't want to risk leaving your stop loss here in case something, you know, we get down, we hit a certain point, and you're in profit, and then price just shoots back up. So you can set the stop loss to trail the swing highs. Okay, and you can see that if we're trailing the swing highs, your stop loss would originally be up here, where there's you can see where it says -6. It's just -6 because where this is back in time. Then when you have a new fractal high formed, your stop loss would automatically shift to above this one, and then to above this one, and then to above this one, all the way until you hit your take profit or you get stopped out. Either way, you've had a plan. Okay, you've had a plan and you've been able to reduce risk as price moved in your intended direction. Beautiful. Okay, good feature. Swing highs are quite helpful on the lower time frames because you need to survive. They're going to have more of these swings. If you're in a daily trade, you can do the same thing. But also on the daily trade, you're going to have, price is going to respect the lows for longer. Okay, so say you were in here and you were buying, then, and you had your target up here, price does respect the lows unless you're in like a ranging market. Okay, so I do explain that in the support and resistance video as well. So it depends on what time frame you're on. Either way, you need to have a plan. Okay, it needs to be either trailing stop automatically, or you need to be able to manually do it, or you're going to have a point that when price gets to 1-to-1, you're going to scale out some of your position, move your stop loss to break even, and then let the rest run, leave a runner. That's the way I do it, but it's definitely not the most perfect way. But either way, you need to have a plan, because you always need to know there's always going to be an element of regret in every single trade. Okay, so you're either going to take profits at a level that you're just happy with, and then just be happy with it, and then you'll probably see price continue, and you'll be like, oh, why didn't I just, I should have left a runner on, or I should have just let it go further. Or you're going to say, this time I'm going to go for a bigger target, and then price will get close to your target. Like say you had your target down at this level of support, and you're going to go for this massive trade, then price will get get down to it, and then it'll stop just beforehand and then reverse. And then you'll be thinking, why didn't I take profits along the way? So very, very rarely are you going to actually pick the absolute top and absolute bottom. So just don't go for those things. Just take profits along the way, at logical places. At least 1-to-1. Start taking profits. Okay, but if you were in a trade, and it was getting close, and it was sort of showing some exhaustion phase, and you didn't want to move your stop loss to your entry because how many times does this come back and then stop you out perfectly? Okay, so what you can do is you can take a portion. You can take a portion of your trade, a small amount, and leave your stop loss above your entry, and that way, if it does come back up, that small portion that you took at least paid for this little loss here. Okay, so either way, the end result is not going to be a loss. It's going to be a break even. So these are all strategies to keep your losses small. Keeping losses small, and then being able to let your winners stay full winners. Because otherwise you're going to get scared. You're going to close out way too early. Okay, so have a plan. Be consistent. Have a plan that you're comfortable with. Okay, so and that one that you can actually do over and over and over. Let me just do this in summary. Okay, so I'm just going to draw this. So you've got. Let me just turn this asking price off. Okay. So in summary, what we had, if you identify that you want to be in a trending market and you've caught it, let's just say that you managed to get in around the lows. Okay, so entry would be around here. If you have your take profit along here, how are we going to do this? We can either be taking, just be happy that you're going to take you're going to either trail your stop above each closed candle, below each closed candle, until eventually we start making a retracement, and then that would be somewhere you're getting closed out. Or you can be taking some profits up here, and then trailing your stop below the swings. Okay, and you're never gonna get the best best exit price, because you are going to have go through some of this drawdown, and that's okay. That's just normal. That's part of trading. Or you can just have you can take profit here, move your stop loss up to your entry, and then let it go. Okay, let it continue, and then still trail the price. Or you can go up a time frame, because they're going to be stronger confirmations, and then trail your stop below the lows of your higher time frame. Okay, so there's a bunch of options for you. Just have one. Just pick one. Pick one of those. All you need is one of those. That's going to be part of your plan. It's going to be consistent, and it's really going to make a difference in your trading. Okay, so I might leave it there. That's around 20 odd minutes. I'll do more in-depth video on each specific one, but I just wanted to get this one out there because this is one that you definitely need to. It should be one of your biggest priorities in your trading plan is how you're going to manage your trade. Okay, because we can't just set it and forget it. There really is not much that really doesn't exist in setting and forgetting. Okay, you need to have some sort of plan. Alrighty, so once again, thanks everyone for watching. I'm just going to leave that one there. If you like the video, you know what to do. Subscribe, like it, and drop a comment if you want me to cover something else. Okay, thank you.